Welcome to Alan Berry Reports TV. I'm your host, Alan Berry Labucan from AlanBerryReports.com. Today we have a new installment of our In the News show. This is a program where we talk about resource companies and discuss some of their recent news that they've had out regarding their projects. What we do before we start that is we have some opening commentary about some big picture things that we're seeing happening with trends or in the markets, and we'll be doing that again on today's show. Before getting started, we always like to start out with some thank you messages to those that are important in us being able to bring these shows to you. First of all, we use youtube.com as our primary website to produce and broadcast these shows so that you can watch them at your own leisure. And they have a really great website for anybody interested in doing online shows. Also, if you're watching the show on our website at AlanBerryReports.com, you'll notice to the left and right of me that we have banner sponsors. Those banner sponsors are really important to us being able to bring these shows to you. We always encourage you to do some homework on these companies. All you have to do is they are the links or the banners are directly linked to those companies' websites, and on their websites you can find plenty of information about their projects, the people involved, the news that they've had out, and it's really great resource. They have really great resources for you to do your homework on those companies, and we invite you to check them out. And of course, to you, the viewers, you give us an audience to talk to about stock, the commodities, the resource stocks, the markets in general, and other topics, and we really appreciate you taking the time to tune in, so thank you very much as well. So on today's opening commentary, we wanted to talk about last week a little bit. There was a fair bit of volatility in the market last week for anybody that follows the commodities and resource stocks closely. This had been prior to this big volatility last week. There had been quite a good rally in several commodities. Key ones that we were talking about and expecting the rallies to happen were gold and silver and copper and some of the other commodities. And then they had run up quite a bit, and so then there was a period where we were expecting to see some profit taking. Now, we made those comments prior to, so it's not like we jumped on the bandwagon. That's what we felt was going to happen, and that's what we saw happening. Now, any time that there's serious volatility in the market, this can cause a lot of investors to make some panicky type decisions. And the ones that do the best during highly volatile times are those that can keep a level head during that period of time. And some of the key things to do that enables one to keep a level head during highly volatile times is to clearly understand, in the case of commodities, the fundamentals that drive those commodities, or in the case of a resource stock, or any stock for that matter, is what fundamentally is happening with the company. In the case of resource stocks and commodities being so closely tied, what can happen in the commodities with commodity prices can also impact on resource stock prices, and so it's important to keep track of what's going on with the fundamentals of those two. And so then, when you get these highly volatile periods, you can always look back on the fundamentals and ask yourself, well, has anything really changed fundamentally? And last week, nothing really had. The long-term fundamentals of what's driving commodity prices higher for the last decade and why we expect it to continue for the next decade has to do with long-term underinvestment, looking for and developing new deposits to feed future demand. And at the same time that we have this a few decades of underinvestment, we've also have now really strong growth from emerging economies that are demanding and using larger amounts of those commodities. And so you have a perfect storm for the last decade, and that nothing has changed with that perfect storm. You still have under investment, not enough new deposits being found and coming online to feed future demand, and then this strong demand from emerging and developed economies, and that's what drives the commodity prices now. Nothing had really changed. And then another thing that has a big impact on commodity prices is the U.S. dollar. So we've got to look at the fundamentals of the U.S. dollar. Are they still building up rapidly growing deficits? Yes. Are they still rapidly growing their debt? Yes. Are they still printing money like it's going out of style? Yes. These are what drives currencies down. That's exactly what's happening with the U.S. dollar. That bearish trend is continuing. It will have short-term rallies like it did last week, but long-term, we think that bearish trend is here to stay for some time. Another thing that we've talked about on several of our past shows was that we felt that prior to last week's pullback, there was a disconnect, somewhat of a disconnect between commodity prices and the prices of that resource stocks were getting for the assets that they have, primarily deposits in the ground. And so the value of the commodities that are in those deposits was growing, but the companies were not getting an appropriate valuation relative to that. And so there was this disconnect, and we thought that is overdone, and that's one of the reasons we felt that resource stocks will outperform commodities going forward for the rest of this year. And so since that pullback last week and all the volatility, we've seen the resumption of the bullish trends for commodity prices, and we're also seeing the resource stocks participating nicely as well. So that's a really good indicator where we feel that resource stocks are primed to significantly outperform commodity prices throughout the rest of 2011. There are two key catalysts. One of those is that we think that there's a repricing that has to happen with the resource stocks that hold these important deposits to more clearly reflect the prices that those commodities are trading for. And so we think that is one key reason. The other is we think that commodity prices are going higher, and so that has a natural pull on resource stock prices as well. And so those are some of the key reasons that we think that resource stocks will outperform commodity prices going forward throughout. We're just trying to look throughout the rest of this year. Got about a half of a year left, and so we don't like to get too far ahead, but we think that we're coming into a really good period for the remainder of 2011. So now we wanted to move on to talking about a couple of companies. Today's show, we have two companies to talk about. One of those companies is involved with copper and gold, and the other is a uranium company. And so we'll get right into that. The first company we're going to talk about today is Exeter Resource Corp. On the disclosure, we're not shareholders of the company. They are a banner sponsor on our website. If you'd like to do some homework again, the banners, their banner is directly linked to the company's website, and you can find plenty of information about Exeter on their website, and you can get there via our banner. The past coverage, we started coverage of them in our email newsletter, the Alan Berry Reports, on March the 31st, 2009, which was our 23rd edition. We also have had him on several of our past shows. The first time we had him on was April 21st, 2010. If you're watching the show on our website at alanberryreports.com, you just look above me at there's a report section. In there we have all the reports, and that's where you can find that 23rd edition. In addition, above me also is a show section, and in there we have a directory of all our past shows, including the dates, which companies were talked about, the subjects that were talked about, and a link to go watch those shows. And so you can find the past reports and the past shows in those sections above me on the website. Their address is exeterresource.com. That's exeterresource.com. And since the last time we talked about them on the show was on March the 31st, March 29th. And since then, they had one news release out that we wanted to talk about. That was on April the 18th. And I'm just pulling up their website right now. And on the website, they have a section called, it's in the, what you're looking for is company news. And then they have it broken down by year. So we're looking for news from 2011. The press release we're looking for was on April the 18th. The headline from that press release is Exeter reports successful completion of infill drilling at its Caspiche copper gold project in Chile. They went on that they announced results from infill drilling program on their Caspiche porphyry project in northern Chile. The purpose of the programs was to lift higher grade inferred category mineralization into the indicated category. So in order to do that, a company has to drill closer distances between each drill hole, and that's one of the reasons that and that gives you an increase in the category, and each increase in the category gives you a higher confidence level in the resource, and it's those steps that lead you towards building up reserves and reserves proven and probable and stuff like that in the future. And so they went on that the highlights from the infill drilling program included one of the holes, for example, had 908 meters or 2,979 feet at a grade of 0.60 grams per ton gold and 0.22% copper. This is indicative of this resource at Caspiche. Another hole, for example, had 572 meters of 0.78 grams per ton gold and 0.31% copper. So this is one of those big tonnage open pit type targets that we're looking that you look for in areas of Chile like they are. There's a quote from Justin Tolman, who's Caspiche's project manager, and he stated, and I quote, "The results from this 6,600 meter drilling program demonstrate the continuous nature of the Caspiche mineralization and support the integrity of our geological model. AMEC International has now been retained to begin work on an updated resource estimate. The inclusion of the results from this additional drilling in the upcoming resource estimate update should allow us to consider economic extraction of higher grade portions of the deposit currently classified as inferred within our pre-feasibility study currently in progress." End quote. They also gave you an update that two drill rigs are now exploring for additional porphyry mineralization in the immediate vicinity of the Caspiche resource. A third rig is recovering mineralized material from within the Caspiche deposit as part of their metallurgical optimization and flow sheet development programs. They mentioned that the oxide gold deposit standalone pre-feasibility study remains on schedule for release in Q2 2011, so it's right around the corner. Then they have a table with the various different drill hole results and some more details about the exploration. And so that's the key information we wanted to talk about from their press release. Some of the reasons that we follow Exeter and like the company and feature them in our reports and on the shows is that they have a very large, undeveloped, maybe one of the largest undeveloped gold copper deposits in the world. It's in a place in Chile where there are other very large deposits of these open pit type targets. and Exeter has a world-class asset, and we've been following them as they've been moving from early exploration, and now they're advancing it. And so we've been on their trail for quite a while. They're doing really well. They're doing a lot of the key work to evaluate the economics of bringing their oxide deposit into production. There's there's one sort of pod in their overall deposit that is an oxide zone, and the idea is that maybe they'll be able to bring that into production and then use the revenue from that to help them develop the much larger overall deposit. And so they're doing a lot of work. They're very well funded. And we expect them to be generating a lot of news in the months ahead. And so, having a world-class deposit, a lot of companies will talk about having a world-class deposit, but sometimes I think that might be a little bit of wishful thinking. In the case of Exeter, they definitely have a world-class deposit that is undeveloped, and we think that there's a lot of exciting growth prospects ahead for the company. And so, great place to look, do your homework is on their website. That's at exeterresource.com, as I mentioned earlier, or you can always click on their banner on our website, and that'll take you to their website. So that's a wrap on our chat regarding Exeter. The second company we're going to talk about today is UEX Corporation. Done disclosure, we are shareholders of the company. Our past coverage, we started covering them in the email newsletter, the Alan Barry reports, on December the 5th, 2006, which was our 10th edition. We've also had them on one of our past shows, and that was on October the 13th, 2010. If you want to find those past reports, look above me on the website. In the reports section, we have all those past reports, including the 10th edition. You can print it off or read it at your leisure. And on the shows section above me, we have a directory with all the past shows, including that October 13th show, and there's a link to go watch that show. Their website is UEX-Corporation. That's UEX-Corporation.com. And there's a couple news releases we wanted to talk about. The first one is from February 24th. And in that one, the headline is UEX and Areva 2011 Western Athabasca Basin drilling programs underway at Shea Creek and Douglas River. They go on that they have commenced the 2011 Western Athabasca drilling program that was announced on November 18th, 2010. The program will test open pit mineralization and prospective target areas along trend at the Shea Creek project and at the adjacent Douglas River project. The projects represent two of the 10 49% owned Western Athabasca uranium joint ventured with Areva, the operator. The most advanced of which is their Shea Creek, for which resources were announced in 2010. Then they give you some details. We've followed the Shea Creek project very closely since we first started following the company in 2006. In fact, that's the key reason we started following the company, was their Shea Creek deposit, our project, and has consistently found very high grade uranium in multiple holes. And I think they talk about doing $7.9 million worth of work. That UEX, who owns the 49% interest, would be responsible for nearly $4 million of that. Then they talk about their Kiana project. This is another up-and-coming, very good project, also with very high grades. And they give you some details about their Colette, their areas around the Kiana and 58B deposits, their Douglas River project, and details about the Shea Creek. And so you can find that all in the February 24th press release. And then on May the 3rd, just last week, they had a news release out. The headline from that one is UEX Areva Drilling Expands Basement Mineralization at Kiana Deposit. SHE-130-4 intersects 25.1 meters, grading 1.28% uranium, including 9.5 meters, grading 2.3% uranium. They go on that they are pleased to announce results from their first directional drill hole from the continuing exploration at the Kiena deposit on the Shea Creek project. Then they give you an update on the drill holes. Again, they've already mentioned them in the headline there, and so you can find that in the press release. There's a quote from David Reese, who is on their advisory board member. He stated that the new basement intercept is significant because it likely links what was previously thought to represent two distinct parallel mineralized zones, and consequently could greatly expand the area of known basement mineralization at Kiena. End quote. So that's really important development there. When you, instead of having two, you might have one big one. So that's a really important development. And then they have some more details about the exploration. And again, you can find that in the press release on the company's website. Some of the reasons that we like UEX, first of all, since the Japanese earthquake and the situation with the nuclear reactors out there, there's been a lot of emotion trading in the uranium stocks, and we think that has gotten way overdone. The reality is that this world just will not operate without nuclear energy as an important source of energy. And so once reality starts coming back in, we think that the uranium stocks will also start to have some reality start to trade back in them. And in the case of UEX, they've done a lot of drilling over the past 4 or 5 years. They've come out with a lot of high-grade uranium. It is in Saskatchewan, their projects. Saskatchewan is the most important source of high-grade uranium in the world. They have, so it's very mining friendly for uranium in Saskatchewan. The thing that makes the deposits out there really unique is that they're tremendously high grade, and UEX has the 3rd and 6th largest uranium resources ever found in Saskatchewan, and they're still undeveloped. They've got a major uranium mining company as a partner. They're well funded. They've got a lot of work going on. We expect them to put out a lot of news, and we'll be expecting to talk about them more in future shows. And so a great place to do your homework, again, is on their website. That's uex-corporation.com. And great place. You can find plenty of information about the company's projects and what they're doing on their website. So that's a wrap on our In the News show today. Before closing, we'd like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own research and speak with your financial advisors before making any investment decisions. We're always trying to grow our audience, and any efforts that you can make to help us to let your friends that follow the markets know about our reports, our website, and our shows would be greatly appreciated. We also really appreciate you taking the time to tune in to watch these shows. We know that everybody's very busy these days, and we strive to produce a show that brings you helpful, high-quality information. Our next show is going to be another In the News show in a couple days. The best way to keep track of all the work that we're doing is to subscribe to our email list. There's no charge to be on that email list, and we send you out our reports, our updates when we're doing shows like this. And it's a great way to keep track of what we're working on. And on the website, there's a subscribe section. Just fill out the information, and we'll keep you updated on our work. We hope you can join us for our next show. You can find all of our work on our website at allenberryreports.com. We'll see you soon, and have a great day.